The recent formation of bullish reversal candlesticks in ETH at a strong support confluence raises expectations of a major upward retractment ahead. Now, Ether, Ethereum's native cryptocurrency, is positioned for a big upside retractment in the coming weeks after painting a so-called double Doji pattern, which is backed by a few positive technical signs. So let's take a closer look at this info. But first, we ought to understand what a Doji is. A Doji candlestick emerges when the opening and closing prices of an asset are almost identical for any given reporting period, and it typically indicates a reversal pattern for technical analysts. Now, in Japanese, Doji actually translates to blunder or error, referring to the rarity of the opening and closing prices being exactly the same. Indeed, buyers and sellers are in a deadlock because everyone is effectively evenly matched. Depending on where the open or close line falls, a Doji can be described as a gravestone, long-legged, or a dragonfly. Dojis may indicate bullish and bearish reversals in an asset's price, which is why it's worth keeping an eye on. Now, this is because it usually indicates a significant pushback from the buyers in a bear market and vice versa for a bull market. So this is why some experts are predicting a turnaround. Buyers or sellers may be building momentum for a continuing trend. However, there is a bit of a caveat here. A double Doji, which is what we've got here, indicates that traders' biases are still in dispute, which might actually result in a price breaking out in a different direction to the one that's expected. With the ETH-USD pair creating a similar pattern on its weekly chart, the coin appears poised to make significant trend-defining moves in the coming days. Some Ether technicals point to a dramatic recovery rise, starting with its 200-week exponential moving average near $1,625, which has functioned as a key support level since May of 2022. And following that, Ether receives another definite price floor in the $1,500 to $1,700 region, which was pretty critical in halting the token's bearish efforts between February and July of 2021. These technical signs, when combined with a double Doji, indicate that, well, a price comeback could be imminent. So, if the price of Ethereum continues to rise, as we have seen, the next positive goal is the 0.5 fib line, around 2,120 of the Fibonacci retractment graph. And this would of course represent a 20% increase. Meanwhile, a sustained rise above the 0.5 fib line might actually lead traders to the 0.382 fib line at $2,700 as their next upward objective by the end of September 2022, a level that actually coincides with ETH's 50-week EMA. That's the red wave on the graph. Now, in layman's terms, this would be almost a 50% price increase. If the double Doji pattern results in a breakdown below the support zone, Ether might actually reach $1,400. This level actually corresponds with ETH's 2018 high and served as a real support in February 2021, as we can see on the graph. And look, a decisive breakdown below the $1,400 support level then opens the door to the 0.786 fib line near $1,000 as the next downside target. And as a result, I encourage everyone who has Ether or plans to buy it to keep a careful eye on the market. And if something significant changes in the market, I will promptly notify you. After all, our news is published on a daily basis, and we're constantly keeping you up to speed on the latest events in the crypto industry. In any case, if you enjoyed the video, don't forget to subscribe, and I will see you in the next video. Thanks for joining us.